Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're on the back end of a pretty heavy earnings week in the financial sector. Today we're going to go through the earnings and highlights for Goldman Sachs, GS, Morgan Stanley, ticker symbol MS, BlackRock, ticker symbol BLK, Citi Group, ticker symbol C, and PNC, ticker symbol PNC. If you're new to my channel, I do videos on investing, personal finance, and stock analysis. So if you like this type of content, please consider subscribing. Also, if you enjoy this video at any time, please hit that like button. All right, first up, we have Goldman Sachs. They reported earnings on July 13th, 2021. This is Q2 for them. Results came in, earnings per share at $15.02. Analysts had them coming in at $10.18. They beat by $4.84 per share. That's a huge beat of 47.5%. On the revenue side, they had a huge beat here as well, $2.99 billion more than the analyst estimated them at $12.4 billion. So they came in at 15.39 or a 24% beat. All right, outside of the huge beat on earnings per share and revenue of about 40% and 20% respectively, Goldman Sachs reported that they are going to be increasing their quarterly dividend to $2. This was at $1.25 previously. This is a 60% increase in their quarterly dividend. That's pretty huge. If you're a dividend investor, you're going to be pretty happy with that. I believe their payout is not payout, but their annual dividend is somewhere around 1.4%. So that's pretty good. You're going to be pretty happy with that if you are investing in Goldman Sachs here. One of the things they noted here was they had a really strong performance, obviously, but this is the second highest quarterly net revenues second highest quarterly net revenues of $15.39 billion, and the second highest quarterly net earnings of $5.49. So one of their second best quarter they've ever had. Really good to see there. The firm ranked number one worldwide. A reminder here that they increased that dividend, and their book value per common share increased 5.6% during the quarter and 12% during the first half to $264.90. All right, next up we got Morgan Stanley. They reported their earnings on July 15th. Analysts had them coming in their earnings per share at $1.66. They beat that analyst estimate by 23 cents, coming in at $1.89, or beating earnings per share estimates by 5.5%. On the revenue side, they reported $14.76 billion, and they beat the analyst expectations by 763, or about a 13.8% beat there on revenue. All right, so for Morgan Stanley, they had a really good quarter as well. They didn't have huge beats, but they were pretty dang good beats on both revenue and earnings per share. One of the things here is they also increased their quarterly dividend by double. So they increased their quarterly dividend from 35 cents per quarter up to 70 cents per quarter. That's huge. So they doubled their dividend. That puts their payout rate, their dividend yield somewhere around that 1.5% range. You can see here that they were paying previously around 35 cents per share per quarter, and they've been doing that for a couple of years now, and they just increased to 70 cents per share. They also said that they're going to authorize purchase of common stock up to $12 billion over the next year. So that's great. Love to see stock buybacks. Love that, love that, love that. All right, so if we look at Morgan Stanley shares outstanding over the last couple of years, you can see they're buying back shares from about $2 billion all the way down into the $1.57 billion. And then they reissued some shares during the pandemic, and they put them at where they're currently sitting about 1.38. If you do the quick math at the $90 per share, and they do a $12 billion worth of buyback, that gets you 130. They can retire about 130 million shares. Still doesn't take them back to where they were pre-pandemic, but it does. It is a sizable chunk worth of buyback, so it is good to see still. But just remember, it's not where you were, a year ago this time. Hey, if you like the video, please like the button. Please like. Thank you so much. Next up, we got BlackRock. They reported their earnings on July 14th for Q2. Analysts had them coming in at $9.46 per share. They beat that by 57 cents, coming in at $10.03 per share. On the revenue side, they reported $4.82 billion. They beat the analyst estimates by $207 million, or a 4.5% beat on the revenue side. And on the earnings per share side, they beat estimates by 6%. All right, so BlackRock did pretty good this quarter, beating their revenue and their EPS estimates. On the highlights side, I think this right here, increasing the revenue year over year by 32%, that's very significant, and a 14% growth in technology services revenue. This consistent capital management down here at $300 million of quarterly share repurchases. I'm a big fan of this. Love it. This isn't just a commitment. This is them actually doing it. So good for them on that. Speaking of shares outstanding, they've done consistently well at buying back shares. Well, this isn't a huge difference. This is also, but it is consistent, and we love seeing that consistent buyback over a long period of time. Love this. They had a slight flat area during 2020. We assume these buybacks are probably going to continue more aggressively going into the end of 2021 and the beginning of 2022. Next up, we got Citi Group, ticker symbol C. They reported their earnings on July 14th for Q2. Analysts had them coming in at $1.88. They blew that out. They beat by 96 cents, reporting $2.84 per share on the EPS side. It's a 51% beat on EPS. On the revenue side, the beat was much smaller at about 1.7%. Analysts had them coming in at 17.18. They beat by $292 million, coming in at $17.47 billion as a reported revenue. So Citigroup had a wonderful beat on earnings per share, and they also have some really interesting news inside of their press release on the 14th. So outside of just having a great beat there, net income came in really high at $6.2 billion. That was from the $17.47 billion. Let's see, $17.5 billion. The thing here that we really want to say is repurchase $40 million of common shares. We'll look at shares outstanding here in a second. All right, so with that book value per share at $90.86 and the tangible book value at $77.87, if you look at their current share price at $68, all that's telling you is their equity is definitely, when you divide it by the number of shares outstanding, is higher than what they're currently trading, indicating that they are undervalued by those metrics. So that's a good thing if you value those metrics. Definitely something to look more into. That's definitely an interesting something objective and hard you can look at when you're doing your valuation. So it's definitely good to see that equity in the business for sure. All right, so when we look at shares outstanding for Citigroup, you can see, again, they've been buying back shares from 2016 all the way until current day. They stopped buying back shares about in 2020, and right now they've reduced their shares outstanding by about, what is that, 1 billion shares? It's pretty good. So about by 33% in the last 4.5 years. So that's pretty dang good. All right, last up we got PNC, ticker symbol PNC. They reported earnings on July 14th. Analysts had them reporting their EPS at about $2.67. They missed that estimate by 24 cents and reported $2.43, or about a 9% miss there on EPS. On the revenue side, they were able to beat analyst estimates of $4.43 billion by $244 million, reporting a revenue of $4.67 billion, or a 5.5% beat on revenue. So outside of missing on earnings per share, PNC has some other noteworthy news. Their acquisition of BBVA USA acquisition closed on June 1st of 2021. So, some of their revenue in this quarter was contributed to that, contributed to this quarter's revenue. Some things on that acquisition to note: purchase price at $11 billion in cash. They're on track to realize $900 million in cost savings in full year 2022. And incur a total of $980 million in merger and integrated related cost. That will be incurred throughout the remainder of 2021. And then they're going to convert those branches by the end of 2021. Please consider subscribing, hit that like button, and let me know down in the comments what you think. Thanks so much for watching. Frank Finance, out.